Get ready, Bitcoin Bulletin fam. We're diving headfirst into the biggest stories shaking up the crypto world. First up, we're breaking down the groundbreaking research from the Motley Fool that uncovers the largest public companies holding Bitcoin. Should you be investing in these Bitcoin Treasury companies, or is it safer to stick to the digital asset itself? We've got the details. Next, we're analyzing why Bitcoin, Ether, XRP, and Dogecoin are lagging behind the soaring stock market. With the VIX stirring up some nerves on Wall Street, what does this mean for your crypto portfolio? We'll break down the market sentiment and what's driving this divergence. Then, get ready for some major predictions. Tom Lee, the renowned Fundstrat co-founder, is forecasting a grand rally for Bitcoin and Ethereum in the fourth quarter. We'll explore his reasoning, the factors he believes will drive this surge, and what it means for your investments. And finally, we're bringing you crucial news on security. The U.S. Department of Justice is seeking to confiscate $5 million in Bitcoin tied to widespread SIM swap frauds. We'll explain how these attacks work and what the DOJ's actions mean for crypto security. Stay tuned for all this and more. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. Bitcoin Treasury companies, a goldmine or a minefield? The crypto market has seen explosive growth, with Bitcoin itself soaring by nearly 1,000% in just 5 years. This incredible performance has attracted a diverse range of investors, including major corporations. But have you considered investing not directly in Bitcoin, but in the companies that hold it on their balance sheets? Our latest research from the Motley Fool dives deep into the world of Bitcoin Treasury companies, revealing the largest public players in this unique space. At the forefront is Strategy, formerly known as MicroStrategy, which holds an astonishing 638,460 Bitcoin. Their stock has seen a remarkable 2,220% surge over the last 5 years, making them a compelling, albeit complex, investment vehicle. These companies operate by raising capital through debt and equity, then investing it directly into Bitcoin, aiming to increase their Bitcoin holdings per diluted share. The allure for investors is the potential for amplified returns. When Bitcoin rises 20%, these stocks might jump 40%, and for some, it's the only accessible way to gain crypto exposure. However, the risks are equally significant. A sharp downturn in Bitcoin's price can devastate Treasury company stocks, especially given the leverage involved, raising concerns about debt servicing. Volatility is extreme, and the rise of spot Bitcoin ETFs presents a new competitive landscape. Analysts suggest that only those with a profound understanding of Bitcoin, security analysis, and fixed income markets should even consider these investments. The prevailing advice: keep it simple. Own Bitcoin directly through self-custody or a spot ETF. But is the traditional market signaling a shift that could impact crypto's trajectory? Next, we'll explore why Bitcoin and other major cryptocurrencies are trailing behind stocks, and what the VIX is telling us about market nerves. Stocks soar while crypto stalls. What's behind the divergence? As the S&P 500 and Nasdaq hit record highs, driven by anticipation of a Fed rate cut, major cryptocurrencies like Bitcoin, Ether, XRP, and Dogecoin are conspicuously lagging. Wall Street's fear gauge, the VIX, is showing a slight uptick, adding a layer of caution to the otherwise bullish equity market. What's causing this disconnect? Bitcoin has been trading in a narrow range, failing to break past recent highs, with long-term holders reportedly taking profits, counteracting bullish pressure from spot ETF inflows. Similarly, Ether has pulled back from its peak, and XRP and Dogecoin are also showing a lack of upward momentum. This sluggishness is puzzling, especially for Ether, often dubbed the internet bond, which should theoretically benefit from impending rate cuts. The situation is further complicated by the VIX, the S&P 500's implied volatility index. Historically, the VIX moves inversely to the stock market, but a recent spike alongside rising stocks suggests potential market vulnerabilities, possibly indicating stretched upside positioning or traders hedging against a correction after the anticipated Fed rate cut. Volmex's Bitcoin implied volatility index has also risen, mirroring the VIX. Analysts suggest that while a standard 25 basis point rate cut might lead to a slow grind higher for BTC, a surprise 50 BPS move could ignite a rally across stocks, crypto, and gold. The current divergence highlights the complex interplay of macroeconomic factors, investor sentiment, and the evolving dynamics of the crypto market post-ETF launches and election outcomes. Could a prominent market analyst's bold prediction signal a turnaround for digital assets? Get ready, because Tom Lee is forecasting a grand rally for Bitcoin and Ethereum, and we've got the inside scoop. Tom Lee's grand rally prediction: is a crypto boom imminent? Get ready for a potential seismic shift in the crypto market. Renowned Fundstrat co-founder Tom Lee is predicting a grand rally for both Bitcoin and Ethereum in the final quarter of the year, citing monetary liquidity, global central bank easing, and seasonality as key drivers. Lee believes we're heading for a truly significant move in the next 3 months, presenting outstanding investment opportunities. Lee draws parallels to September 2024, when a market-friendly regulatory decision boosted liquidity and investor confidence. He sees Ethereum as a next-generation growth protocol, benefiting from the migration of traditional finance into digital assets and the integration of AI with blockchain. This optimism is reflected in BitMine's aggressive accumulation strategy. The company, the largest public holder of Ethereum, recently reported managing over 2 million ETH alongside significant Bitcoin holdings. Meanwhile, Strategy continues its Bitcoin acquisition spree, adding hundreds of BTC weekly. However, the landscape for digital asset treasury companies is becoming increasingly challenging. Standard Chartered notes a decline in share issuance for crypto purchases due to falling MNAV, market capitalization to crypto reserves ratio, at many firms, making expansion difficult and risky. This could lead to market consolidation, favoring larger players like Strategy. JP Morgan previously noted that Strategy's exclusion from the S&P 500 was a blow to crypto treasuries. Despite these headwinds, Lee's forecast suggests a strong potential for upside in the coming months, driven by macroeconomic shifts and technological integration. But with all this market movement, security remains paramount. Are your digital assets safe? We're turning to a critical update from the DOJ regarding millions in Bitcoin allegedly stolen through sophisticated SIM swap schemes. DOJ targets $5 million in Bitcoin from SIM swap heists. The U.S. Department of Justice is making a strong move against cybercriminals, seeking to confiscate approximately $5 million in Bitcoin allegedly stolen through widespread SIM swap attacks. This action highlights the persistent dangers lurking in the digital asset space and the government's commitment to combating crypto fraud. Federal prosecutors detailed how cybercriminals between October 2022 and March 2023 compromised the mobile phone numbers of 5 victims. By hijacking these numbers, attackers intercepted two-factor authentication codes, gaining unauthorized access to digital wallets. The stolen Bitcoin was then moved through multiple accounts before landing in a wallet linked to the online casino StakeCom. Court documents reveal frequent, intricate transfers between digital wallets and the gambling account, a classic money laundering tactic designed to obscure the illicit origins of the funds. U.S. Attorney Jeanine Ferris-Pirro emphasized the DOJ's dedication to fighting digital fraud, noting that since 2020, their cybercrime division has recovered hundreds of millions for victims and secured over 180 convictions. This case serves as a stark reminder of the vulnerabilities in mobile security. Experts strongly advise cryptocurrency investors to bolster their defenses with hardware wallets, multi-factor authentication, and stringent PIN protections with their mobile carriers. This forfeiture claim is part of a larger federal effort to curb crypto-related crime, following previous actions like reclaiming $225 million in Tether linked to investment fraud and targeting ransomware operations. The FBI reports that SIM swapping has become a preferred method for criminals, contributing to a staggering 66% increase in cryptocurrency fraud losses in 2024 alone, reaching over $9 billion. That's all the breaking news for today. But before you go, a quick recap of the biggest stories and how you can stay connected. And that's a wrap on today's Bitcoin Bulletin. We covered the Motley Fool's deep dive into Bitcoin Treasury companies like Strategy, analyzed why Bitcoin and other cryptos are lagging stocks amid VIX jitters, heard Tom Lee's bullish, grand rally prediction for BTC and ETH, and reported on the DOJ's $5 million Bitcoin confiscation linked to SIM swap fraud. Don't miss out on future updates. Smash that like button, subscribe to Bitcoin Bulletin, ring the notification bell, leave a comment with your thoughts, and follow us on all our social channels.